Okay, testing, 1, 2, 3. Do we have sound? Not entirely sure. Yeah, I think you do. Yeah, wonderful. Well, thank you for your patience. I got a forced update on the software. It monkeys around with things. Took a little longer. But how are you doing? Comment allez-vous? Cool. So give me 15 seconds, and I'll come back and we'll start this trade non-farm payrolls live. Is it 11 years yet, or did we already pass the 11-year anniversary? Back in 1 minute. BRB. All right, how are we doing? We got sound? Yeah, it looks like we got sound. You have to untangle my headset. It's here, it's there, it's everywhere. There we go. And we got the webcam going. Hey, good morning. Let's get her done. Oh, and are you okay? We'll do that too. Hang on, let me load everything up. I want to be inclusive. It's something that's important to my school. Everybody gets a shot. What was I going to do? Oh, yeah. I'm going to log into tradethenews.com so that we can get the data. That's good. Almost done. All right. Well, I think we should be good to go. How
In
exciting.
the session, they did cut the FX reserve requirement.
Cool. So, has it been 11 years that I've been doing this webinar? Has it been yeah, it is 11 years. Is it the 11th year anniversary or was that last month? That might have been last month, huh? Somebody asked, how many screens do I watch? All of them. Why would I have a screen that I didn't use? Cool. So, anyways, hey, let's get going. Ba, 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 ba. We need the intro music, huh? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. No, you don't have to. No, you don't have to check if it's the 11th year, but I think it's 11 years and 1 month. Yeah, 11 years and 1 month. But who's counting, right? Ah, man, the coffee's good this morning. I eat vegetable soup for breakfast, so I'm a healthy boy. And my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I am here to earn your respect and your loyalty and share. I'll do this by sharing the many years of Forex trading experience that I have in hopes that I can be in some way a positive influence on your trading and perhaps a reason that you become a successful Forex trader. And with that success, your account size should grow slowly and your risk should fall slowly over time. Or maybe you raise a fund and bring in money from friends, families, and fools or something. But our intention is for you to become a success so that we can become the prime brokerage for your successful Forex trading business. And that we will have a relationship for many, many, many wonderful years. So thank you to FX Street for hosting us. I have been doing webinars and other events at FX Street for over 12 years. Now, if you were not a Forex trader 12 or 13 years ago, let me tell you, the industry almost didn't even exist on a retail level. It's amazing that FX Street's been around for so long. They were at the very, very, very beginning. So when I opened my first trading account, there were no charts. It didn't come with charts. No charts. Technical analysis was like an option. You could do it, but you couldn't trade off of your chart. You had to pay extra for a chart, look at it, decide whether you want to get in or not, and then go over to your trading platform and click a couple of buttons. And oh boy, adding limits and stops to each of these, and you couldn't see them on your charts. And wow. And let me tell you, there was no training available. None. Amazing. You know, and that's where FX Street was. They were there to help. It was great. So, anyways, I hang out with our clients Monday through Friday. But every first Friday, I'm here at FX Street. So, very nice to have you. So, please, today, feel free to ask questions. I'd like this to be an open dialogue. We only have 3 hours today. Only. I know, I know. But what do we need to do in this time frame? Well, I need to teach you the scalping technique that we might employ on this high volatility event driven strategy, right? Okay. And then we got to get the news. Great. And then there's going to be volatility once the news comes out. Great. And then that should wane. And then we have the stock market open at 9:30, right? The news is at 8:30 and at 9:30. And does anybody know if we have news at 10 o'clock today? ISM, manufacturing, which always bugs me when this happens because if you've read my lengthy article on FX Street about how to create a model for non-farm payrolls, how to predict and trade the employment situation report, one of the things it uses in the model is ISM services and the employment subcomponent. Well, we don't really have that info yet, so it's an incomplete model. Oh, Henley says happy birthday. Namaste. Thank you very much. Yes, today is my birthday. Thank you, Henley. I am 44 years of age. That's a power year. That's a power year. It's going to be a very good year. Okay. So anyway, so we got the stock market open at 9:30, and then we got ISM, and then we'll wrap it up at 10:30. So there'll be lots to do today, but there'll also be lots of time to cover fundamentals and technicals, trader psychology, whatever you want to do. We'll go there. You are the boss. I am the humble servant. Okay. So a quick thing. This is my credo that I actually came up with this at a business planning retreat I did with myself. Uh, I don't know. Yeah, 12 years ago. I don't know. It's been so long. I don't know. But this was an output that came from that event that I did, and it was a 2-day event. It was a very busy um, retreat with myself. Um, but anyways, if this puts this the if you want to call it the psychology of the trading, right? It puts everything in perspective. Oh yeah, no, I will follow. Hang on. All right. So anyways, it puts it in perspective the mindset of someone that is going to trade not just today and tomorrow and next or next week, let's say, or next month or next year or next decade. Like there's someone that has a long-term outlook for their trading. Okay. And and I just finished a class in Harvard in negotiation, and one of the most important parts of negotiation is patience. If you have patience, you'll get a better deal. To say it differently, if you're desperate for a deal to be done as soon as possible, let's say you were a small business and you're running out of money and you need money from a big investor. Well, the investor has all the time in the world, and you're desperate. You're like, well, in 3 days we'll run out of money. Oh, well, right? So you can see if you're desperate, you're not going to get the same deal. Well, in trading, look, if you're desperate to trade today, if you're desperate to make money, big money fast, um, it's probably not going to work out for you. It's an element of risk. And what I realized when I did my planning retreat, that if I'm going to be here every day, day after day after day, I can be patient. And therefore, my goal when I sit down at my in my war room here, my goal isn't to make as much money as I possibly can. My number one goal is capital preservation, because money is my product, money is my service. If I lose money or run out of money, I'm just simply not in the business anymore, right? So on the long run, I will be successful. So my number one goal is to stay trading as long as possible, because everybody has a bad streak, everybody can get unlucky, but on the long run you should win. So you want to focus on the long run, right? And then there's this idea of when you are trading, you should have some sort of measure, right? Like for example, if you run a sales team, what's the number one goal for a sales manager? Make as many sales as possible. So, right? But that's not how you manage a sales team, or even how a salesperson manages their own day, right? There's other measurements, right? The number of sales is usually the last one. How many phone calls are you making? How many presentations have you made? How many contracts have gone out? Out of your prospecting, how many warm leads and hot leads and cold calls and all these different things are all different elements, right? So in this particular case, what you want to look at is that every trade has its own minimal acceptable performance. That for example, if you're shocked, you should be shocked. Let's say in a typical like spot trade, you should be shocked that you don't make 25 to 50 pips, right? Because you've done the analysis, you have a plan, you have a bias, you've done the technical analysis of multiple time frames, you looked at currency correlation, intermarket um, and intramarket and such, and you place a trade based on all of this analysis, and you should have a certain expectation. For example, if it's a spot trade, you should be You should be aiming for the 50 pips, let's say, wherever the target is. It has to do with other technicals. But let's say if you're only likely to get 10, don't take the trade, for example. It doesn't meet your minimal acceptable performance, right? There has to be sort of the risk reward if you want to look at it that way. Okay. But the powerful part of this, if you look at it as an average now, like a map for a day, like a daily goal, for example, if it's easy, like it's your minimal acceptable performance, not your goal, it's your minimal. But if you look at the average over weeks and months and years, it really adds up like compound interest. Okay? And the interesting thing about this out of my planning retreat is I realized if I only meet this average day after day after day after day after day, it's an average, right? You'll have better days and you'll have bad days, but on average, 365, right? Divide it all up. And what's your average? If you can meet this minimal acceptable performance, the actual return on the long run is really, really good. Okay? So, guess what? This takes pressure off you as a trader. I don't need to hit a home run today. So I don't need to take the risk because a big return, like a big winning day today, means I have to take risk because return is a function of risk. But I don't want risk, right? What I want is the minimal acceptable performance over the long run, and that will produce that the output of that is more than enough return at very low risk, and that's what I want. So I don't have to bet big today. I don't have to like bet the farm on non-farm payrolls and kill it so I can make my investors happy, right? No, no, no. The way you make your investors happy is just steady, consistent returns. Okay, so that's where MAP came from. But once you have your stop move, let's say you move your stop to break even. Now you have no risk in the market. Okay, and after a certain amount of time, you should be able to move your stop to lock in your minimum acceptable performance. Okay. Now what? Well, if you want to get filthy, stinking rich trading, you need to let your winners run. And that's it. That's what capital appreciation is. If your trades are solid and you're trading in the direction of the trend, I mean, obviously, if you're scalping, you're not going to be able to let your winners run. But you should be able to, on at least part of your trading portfolio, move your stop to break even and let the winners run. You've already done the hard work of analysis and entering the trade at support or resistance and locking in a small profit, right? Well, small profits are not going to get you filthy, stinking rich. Okay? And that's where you want, your winners running. That's how you're going to hit it big, but not by taking additional risk. You got it? Hey, I got a troll trolling me. Oh, you're hurting my feelings. All right. Ah, take a screenshot just so you have the basic technical setup. Okay, you got it? And of course, if you miss something, just ask me. But take a screenshot, and then you can reference the setup later. Okay. Now, the first thing I do is I try to measure the direction of the market. Where's the market going, and how fast is it getting there? Makes sense, right? I found early on that if I traded in the direction of the market, I tended to do better than trading against the market. And we all know, or at least I would assume we all know, that that makes a ton of sense, even if you're a troll. right? So in this case, when the 21 is below the 55, I just simply say, technically speaking, this market is bearish. That's it. Doesn't put me into a trade. I just say, well, technically, this market on this time frame is bearish. Cool. But that doesn't pull the trigger. Once I've decided I want to be a bull or a bear, and I've identified support or resistance, one thing that I can do to, as far as a trigger, is I could use the 5/8 cross. Okay. Now let me back up one. You can see right at the beginning of let's say this day, the beginning of this period, the market was already bearish. So I would have been bearish. I would have said, all right, the market is bearish, to the left that you can't see anymore, right? If you were on the previous period. So you wake up and you're already a bear. Technically, it's a bear, so you're a bear. Okay. And this point, therefore, this 5/8 cross down is your opportunity to sell. The 5 has dropped below the 8. So imagine what this means. The market, okay, is bearish. So you're bear. Now, price, right? Price has turned bearish in a falling market, and that's when you should sell. Okay? Now, you'll see that all of a sudden it crosses back up, or at least in this case crosses. That would be your opportunity to take profit. Because the market technically, or sorry, price technically is no longer falling. Now this braiding, I call this braiding, the cross, 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 cross. Okay, you want to stay away from that. Okay. 200 EMA, we can talk about this. I don't think it'll be important during the news scalp, but in normal technical analysis, you want to look at trend. The way I describe it in my book is as a fair market value. And you notice that the market isn't usually fair. What usually happens is there's more bulls than bears, or more bears than bulls, right? But every so often, the market becomes too bullish or too bearish, and it's like pulling back on the drawstring of a bow. And the more you pull, the more it wants to return back to a state of rest. Well, that's kind of like the 200 EMA. If the market becomes way too bearish, what happens? It becomes oversold and hits support. There's profit taking, and it snaps back to the 200. Okay, and then resets. And at that point, I don't really know whether it's going to go up or down because that is neutral. That's when the bulls and bears agree. Okay, but it does become important in your analysis. Oh, you don't see my present. Oh my gosh. All right, so I just was informed that the broadcast software is not broadcasting even though it's overlaying my chart. All right, hang on. Yeah, a little late, guys. I've only been showing my PowerPoint for 25 minutes, huh? All right, so let's see what this does. Does it come in as a media source? It should be a window capture, but you know what? I have so many screens it won't do the window capture. I don't think, because that would be better than a, maybe it's this. Okay. Oh, Peter asks, when do you take profit? Okay, that depends on other analysis. Now, of course, you could do, okay. By the way, I think you can see the PowerPoint now. Okay, I believe. Anyways, so one way you could do is get out on a 5/8 cross back up. Okay. Can somebody confirm that you can see the PowerPoint? Okay, good. Okay. All right. So yes, you could get out a 5A cross up, but I mean that is one thing that you can do. I'll tell you, however, more important than moving averages crossing over. I mean, you don't need this 5A cross. You don't need this 2155. You don't need the 200 EMA. They're all tools that are helpful, but you don't need them. You know what you absolutely are required to have? And that is identifying support and resistance. So, look, if you're a bear, you're bearish, and the 5A cross put you short, and you're a bear because of the 2155. Okay, that's great. Okay, you're like, all right, 2155 makes me a bear. 5A cross puts me into a trade, so you're short in here, and it takes off. But you don't necessarily have to get out on this 5A cross. What you more importantly, what you would have is support and resistance. So you would trade down to the next level of support where other bears are likely to take profit or bulls would consider buying. That's what you want, right? Even more important than all the moving averages and stuff, right? Peter laughs and says it's an old school chart. Yeah, yeah. So if you were hanging out with me at FX Street 12 years ago, okay, the charts were exactly the same. Isn't that amazing? Think about that. There's nothing to market, right? There's no marketing, there's no cool, fun, exciting new trade strategy of the month. Nothing's changed in 12 years. And I think that makes a ton of sense and validates, right? Now, another thing you'll probably see me use today is the MACD. I slow the MACD down, right? And I also speed up the stochastics. And what I'm trying to do is evaluate the overbought and oversold conditions for both market and price. In similar fashion, how I use the moving averages to separate price action from market forces. Okay, you can also do that with oscillators and you try to line these up. Okay, so that's what a typical chart looks like, except I'll use multiple time frames. So this is gold. By the way, we hit my target for gold yesterday at 12:30, but that was my target 3 weeks ago. Is anybody planning their trades 3 weeks out? Well, I hope so, right? So what do I want to do now? Well, I don't know. I've hit the target. Um, so yeah. So I'm essentially neutral. Um, the next level of support I have is 12.17. But the way I look at it, this $15 range or $17 range, that is the bottom. Okay. Okay. That's the bottom. And, you know, if I were speaking to gold investors, and I know gold investors, I would say, hey, if they said, wow, gold's really been falling, we're at 1300 and it's all the way down to 1230, what are we going to do? I say, well, actually, I think we're near the bottom currently for the market. Maybe not for the year, but there's a high likelihood that it'll calm down. It's just right. No need to freak out. You should have freaked out 3 weeks ago. Okay, and that's because I'm using some monthly pivots in there. The next level down is 1200. Okay, but I don't expect that in the month of May. It's nice to be able to talk about that, right? Like, yeah, oh yeah, we could head down to 1200. There's no fundamental reason why it couldn't, just not now. Oh, that was gold. XAU is gold, right? Wasn't there a label on it? Yeah, I guess you can't see that. XAU USD. That's gold. I'm like, all right. Oh, cool. All right, so let's go through the scalp setup, and then we can talk about the headline number if you want. Okay. All right. So this is a high volatility event driven strategy. I'll pick a pair. Now you should be able to see both, right? Well, let me just confirm you can see both. You can see both charts and PPT, right? No, really? It's telling me you can't. So I don't know what you see. The PowerPoint overlays the charts. Yeah. So you should be able to see a PowerPoint presentation says Trader's Way. You see some candles. I'm going to show you how to trade. But you should also be able to see behind it my trading platform. Not just gold, a whole bunch of things. All right, so you know what's happening is there's a delay. I think is what's happening. You, there's a delay of probably 30 seconds to a minute or something. I think that's what's happening. All right, so I'll just continue as you in the assuming you can see what I see. All right, maybe with a delay. All right, so anyways, the news is going to come out. We're going to use a 1 minute chart, and then you could also use a 5 minute chart, and then you could use a 15-minute chart because people that use these time frames will, if they want to trade, do their analysis on these levels, right? But it all starts on the smallest time frame. What'll happen is non-farm payrolls will come out, and people will get excited. They have emotions. I don't have emotions. They'll get excited. Ooh, look at that number. That'll force the Fed to raise interest rates in June. Or they'll say, "Oh, look at that number. There's no way the Fed could raise interest rates in June." And they all freak out. They all freak out. Whatever. But the market will move. So what we'll do is we'll let the market move, and just imagine these are 1 minute candles. Okay, you can see it kind of dropped, and then popped, and then head up, and all that kind of stuff. What we want to do is have the numbers come out, wait a couple of minutes, 2, 3 minutes, right? And hopefully the undue volatility reduces. And then you don't face things like broker execution risk or high spreads if you have a variable spread, right? Some of your brokers jack up the spread to 25 pips and stuff like that, right? Um, by the way, you're more than welcome to come to tradersway.com and see how we compare. I think you'll also find that we're faster than your broker if you're not with us already. But that's for you to try, swing on by. But we want to wait for that extra risk because forex trade, trading forex or trading any market, because this could be anything, right? This could be gold or oil or stock indices or whatever. But you always have your normal risk. But at an event like non-farm payrolls or an interest rate decision or something, what happens is um, there's additional risk that above and beyond the normal risk that you take. So the idea here, if you're a conservative, disciplined trader, focus on the long term, you don't need to be in non-farm payrolls 2 seconds after it comes out. You understand? Right? So in that case, let it go out. Wait 2 or 3 or 4 minutes, depending on the setup. Most of that volatility will settle down. The spreads will come down if you're with a variable spread, right? And sometimes that is just the intermarket. It's not necessarily your broker, okay? Because if the interbank system freezes up because no one in their right mind would trade this, but you want to trade it, well then you're going to have a higher spread. It's just that's how it works. It's an open market. So anyways, let's wait a few minutes so that things kind of quiet down to normal levels of risk and volume and volatility, and then look to trade. So if the first initial candles are very bullish, what we want to do is let it go up, relax, chill out, man, and wait for the pullback. Okay? And ideally, you get something like a 382 to a 618 Fibonacci retracement. Now, in this example, it went even further. After 2 minutes, it retraced almost all the way back down, but it hit the 786 and stopped. Stopped and stopped and stopped. And, here's another 3 or 4 minutes in which we seem to have found support. And notice where the market was before the news came out. So you could long on near the 786 or maybe up on the 618 and just put your stop below that lowest low. And you're risking what? Let's say you're in at 48.70 and your stop is below 53, right? You're risking less than 25 pips. Okay? And that makes sense. On a scalp, you shouldn't be risking more than 25 pips. In fact, 25 pips is actually quite a big stop on news scalping. Okay? But the idea here is if you get this right, it should continue in the direction that it originally moved, right? And you should make a lot more than 25. Now, non-farm payrolls used to move like 300 or 400 pips. Now you might get 70 or 80, right? Okay, well, maybe that's enough, right? For the risk. 25, go for 50. That seems to be pretty normal these days. Another idea here is by the time you get to this original high, this what I call the line in the sand, you should have an opportunity to move your stop to break even. So you're actually risking nothing because think about it. If it's going to drop and make a new lower low, it's probably going to double top and then drop. So when you get to that point where you're near where a double top would form, you should move your stop from down here to your break even point, what I call hero or zero. Okay? Because you don't need the risk. And you might only make 50 pips anyways. Who cares? It's not a lot of pips, right? So just jam your stop and moveon.com. Okay? And so at this point, the moment of truth, you should have risk removed, stops at break even. If it breaks, you get paid. If it collapses, you had the opportunity to succeed, but you lost nothing. And that repeated over and over and over again eventually does lead to success. And in this case, it breaks out and moved on to the next level. All right. That's all it is. It's just an event driven strategy. Don't make a big deal out of it. Interesting. All right. So I'm just getting used to this. I have to physically remove. Are you sure you want to remove this capture? Yes. All right. So we're just back to the charts. All right. So we have about 8 minutes until the news is released. I'll use tradethenews.com. I've been using them for a decade to get the news quickly, instantly, actually. Okay. We have a question here. What about the retracement? Well, you were supposed to enter on the retracement. Between the 382 and 618 is most ideal. You should also look for roll reversals, and we can cover that as well. Looking at oil, my projection for the month for oil was between 45 and 44. We've hit that already. I don't suspect technically oil to go much further than this. It's about, again, this is the projected low for the month. I know it's May 5th, Cinco de Mayo, right? Cinco de Mayo. Ay, 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 ay. Cinco de Mayo. It's only the 5th of the month, but that is the projected low for oil. Now, you can see this could go down to 43 or even 40, but it's not expected to. Okay? So even though I'm a bear on oil, and I've been on a bear on oil for years now, um, I'm not expecting it to fall further. If I wanted to be a cheeky monkey, I could look to buy it today, but that's not really the business I'm in either, you know? Right? If I'm a bear, I'm a bear. But this is definitely support, and I'd be cautious. Now, maybe a horrible non-farm payrolls number would point to a slowdown in the global economy and maybe bring this back down. But I'm out of pivot, so that's going to complicate things for me. So, like I said, I don't expect it any lower. Looking at Aussie dollar, once again, we've hit the weekly and monthly target. Okay? Weekly and monthly target. Now, it may go down to 73.22, but it's not likely to. Okay? Okay? You see that? And I'm a bear on this pair, but this is not a place to sell. So I'm kind of stuck between a rock and a hard place today on a lot of these where I want to sell, but I'm at support. What kind of trader sells at support? Who, sir? Is there a favorite pair that I like to trade during news events like this? Well, you want a liquid market. You want a market that's going to move. You want, ideally, if it's a scalp, you want a smaller spread. So, it depends on what I'm bullish on and what I'm bearish on, and really how the market reacts. So I prefer buying US dollars, and I have no problem selling the euro, for example, or Aussie dollar. But the problem is, I just explained, I'd love to sell Aussie, I'd love to buy the US dollar, but the price isn't good at the moment. You know what I mean? So we got to be cautious on some of these things. Katrina asks, will the USD get strong or weak? Well, how would I know? Right? How would I know that? Well, let me go into the future and find out. I mean, obviously, I don't know. So it really depends on the number and stuff. Once again, I am assuming you've already read the article in FX Street that outlines how to model non-farm payrolls. So you already have a number. You already know what it's going to be based on your analysis. And we also know that it's not likely to be accurate because not all the information is available at the moment. So really it comes down to what the market expects. Now, ADP was as expected. The weekly jobless claims have been, pretty average. The number yesterday was above average. It was a better, right? But it doesn't really point to a phenomenal, way more than expected NFP number. I think the Fed's going to raise interest rates in June no matter what happens. And really, that's what it comes out to, right? That's what it comes down to. Okay. But there are unknowns, unknown unknowns. Like, what if non-farm payrolls is horrific? Well, there's nothing in the analysis that would point to that being a realistic probability, right? But it could happen, but nothing would point to that. And nothing really points to an amazing non-farm payrolls. But it could happen. One of the things we might want to look at, for example, is a revision. Okay, a revision from last month. That might be something that we're not expecting at the moment. Okay. So I have a feeling we're going to end up trading euro dollar. You can see, like I said, I have no problem selling euro and I have no problem buying dollar. We're a little close to this old support. It used to be resistance, it's now support. I call it a role reversal, and that's going to line up with this pivot. But the thing is, you could see earlier today, you could have got yourself short euro dollar on a double top, lower high. What's the secret word? Like I said, I've done this webinar for more than 11 years now. Some of you guys should have some skills by now from the previous teachings. Does anybody know? What's the secret word for that setup? Hammock. Thank you. Okay, and that's a long story. You probably think, well, Wayne, that doesn't make sense. My only point is you should know what this is. You should already expect it. You should be sitting there waiting for this to happen. And of course, it did happen. And we call that technical analysis. Okay, I'm going to get rid of this. I'm going to clean this chart up for you because it's probably a little confusing. Okay, and we're just now maybe a minute from the news. I'll drop into my 1 minute. Okay. And you can see if you were trading this, there were lots of opportunities to sell this today. Peter says he still doesn't understand hammock. We'll talk about it later, buddy.
11,211,000, about the 190
211,
expected, but prior
211,
revised lower by about 20,000 to 79,000. Unemployment dropping to 4.4%. Unexpected drop there to
211.
4.4%.
Everything's fine. That's better than expected, but not crazy, not outside the norm. And yeah. So ah, dang, I didn't have my button on. I reset the chart. I missed it. Dang it. All right, I'm just above the 50. All right, so anyways, 211, unemployment rate 4.4. Oh, oh, somebody's getting wiped out. All right, 4 point. Oh, I just got wiped out. Boy, somebody just freaked out. Look at that. Somebody just freaked out. What is going on there? Let me go through some of this. Uh, Canadian NFP 2.3 or sorry 3.2, less than expected. Boy, that was bad. Look at that. All right. Well, that's why it's a scalp. Looking around, I'm watching the yens. What do you guys think about the yens? Beautiful move on euro off of the 4-hour 21. Pound is actually doing it too. I must have missed a revision or something. Hang on, I want to move though. Come on, let's move. Let's pull up, let's do yen pivots. I think I lost 17 pips on that. All right. Let's take a look. Earnings. I guess year over year, average hourly earnings are down. That's a bit disappointing. Trying to get, was there a revision? Dang it. I keep clicking the thing. Oh, change. So last month was revised lower. So we lost some numbers off last month. Looks like the revision snapped us. Yeah, USD yen coming down. Ton of bricks. Hang on. What should we look at? What should we look at? This is where we're getting kicked. This is the big drop here. Right off this pivot. Amazing, huh? You can see the cluster of two pivots. This is a monthly and a weekly top. But still, was the revision that bad? You know, the market was probably just like I was showing you. There's a lot of things that I wanted to like sell, but you can't sell them. So like, let's go back. Let's switch up. Let's go back to Aussie dollar. Let's go back to this news trade. Like Aussie dollar. Remember I said I'd love to sell it, but I just can't at this price. You know, and maybe there's some of that where NFP was good and better than expected, but not amazing enough to drop us lower than where we are already now. Because again, this is the projected low for the entire month of May, and we're already here, right? So I suppose it's a cautious market. USD yen moved the most. Um, Aussie yen is quite neutral. Kiwi yen is a little more bullish. And pound and euro are trying to get her done. Maybe we'll go check out the beast. Let's go to the beast. Let's move this out a little bit. Okay. You can see we're riding the 21. And the target right now is way up there at like 147.5. No, this is weekly, and they're the targets. So this is the target for the week. 147.50. The conservative target is 146.62. Right? The aggressive target is actually 147.27. Right? There's a few people asking what those boxes are. Okay. That's why I'm showing you on some of these other charts. I'm like, look, I want to sell, but I can't sell here because we're already at the target. Well, I've already done future analysis. Looking into the future, I already had projected those to be bottoms or tops. And with that being said, that was the trade 2 or 3 days ago or 2 or 3 weeks ago. And now that you're at your target, there's not a lot more that you could possibly do. Okay. But you look, you can see that we're still at 46, right? We bounced at 146. And we're trying to get to 147.50. Now, there's already been a bounce in the smaller time frames and stuff. So you have to ask yourself, how do you want to participate in this? Do you want to try to catch a dip and then try to rally it up? So maybe you can catch a dip at 145.50 and go for 147.50. Well, that's 200 pips. And you know the beast, right? You know the pound yen. It could give or it can take the 200 pips pretty easily. Coolio, right? All right, let's do a walk around the world. Let's see how everyone else is reacting. Okay, little drop. Yeah. Well, bear in mind, I don't expect it to fall any further than this area. So even with the NFP news, you can see it hasn't done a lot. And look, if you remove my target, the moving averages project that it will continue down for some time, doesn't it? Remember talking about the 2155, the 200 EMA, the 5A cross. You know, with nothing more than moving averages, this would be a sell right here and right now. Okay? The 21 is below the 55, the 5.8 has crossed down, and you would just simply trade it down to the next level. Okay? I grow cautious because I'm already at my target. That's all. But if you remove that, then it can fall further, right? Okay? So this is stable, I think. Okay, this is stable. Let's check out oil. Once again, we've already hit my monthly target for the month of May. It's been very bearish very quickly. And now my projection is that we hover around this $45 mark. Okay. And of course, if you're a cheeky monkey, you're going to try to counter trend this the other way. But that's a higher risk scenario. But why couldn't it go from 45 back to 55? Why couldn't it, right? And I do expect a small rally in oil, even though I'm a bear on oil. I'm expecting one to occur in the near term. That doesn't mean today or tomorrow, but certainly around June. A couple of weeks before June, a couple of weeks after June, but somewhere in that window, I would expect oil prices rally up. But why not here? Why not just do it here? Once again, like I said, I'm at the projected bottom at the moment. So why not make this the bottom, right? And why not tiptoe back up into the 55 area? Okay. Now, fundamentally, nothing has really changed, in my opinion, up in where between where this rally here and the big drop. OPEC and all that kind of stuff, but nothing's changed. OPEC still um, isn't having the impact you would think because um, OPEC isn't the swing producer. It's not the one or Saudi Arabia is not the swing producer. It's not the one in control anymore. And the world is still oversupplied, and that ain't going to change. So, like, nothing's changed. But, all right, then OPEC comes in and they agree to deeper cuts. Great. Well, then it'll go up, but even then, I still think on the actuality of it won't have a big impact. Okay. So, anyways, it's one of these things. If you're at support, you shouldn't be looking to sell. If you were so bearish, where were you at resistance, right? That's always the laughable part. Now that it's fallen from 55 to 45, now now you want to get short. I mean, it's laughable. Okay, Aussie. Yeah, it's we're at such bad areas for selling. Uh, you're okay. In this case, now you have an opportunity to look if you wish. Okay, this just might be resistance. Would you agree? So it looks like it's just a simple scenario of NFP was good, but it wasn't surprising in any way. And that's all. George says he just shorted there, and I get that, right? That's what I'm trying to point out. I mean, are we at support or are we at resistance? And I think the answer is we're at resistance, right? So that would be an opportunity for someone to enjoy if they're a bear. Chris says maybe get lucky up there, right? No, there wouldn't be any luck to this. It'd be a calculated move, right? Like your stop is just above here, right? And again, if you lose, you're going to lose a little. Now, ideally, your stop is above the 110 psych level, okay? But that's your call. Okay. Let's just mark the 110. I can't even see that anyways. I can't see it. All right. Well, I'll draw it with a gray box then. 110 is about here, isn't it? So if your stop can be above that, that'd be most ideal. Now, just one thing on this. It's not something that I would hold over the weekend if I shorted there. That would just be a counter, a counter trend trade off the news. Totally fine. Pivot area, psych level, it's all good, right? But it comes down to, do you hold this over the weekend if you're profitable, let's say later today, you're still short and you're making money? The answer to that is no. I wouldn't counter trend this over the weekend unless we were above this red zone. Okay? It has to be above and beyond the expected target. And ideally what happens is, a lot of traders take profit seconds before the close. And then it gaps short on Monday's open, right? And so maybe a few minutes or even a few hours before the end of the market, if we were way above here, let's say at R1 or something, at monthly R1, I might look to counter trend that over the weekend. It's a risk. I don't like to do it often, but it is something that you can look at. Yeah, right, right. Yeah, you may not want to counter trend over the weekend with the French election. Good call. It's never really an advisable strategy. I mean, it's extra risk. So you might want to look for like a double top to form on the 1 minute or 5 minute on the euro dollar. Sorry, on the euro dollar. I pity the fool. Kiwi yen is doing surprisingly well, and Aussie yen's doing surprisingly well. I think it has a lot to do with these bottoms that we've already pointed out, right? I mean, look at this move here. Isn't it great? Once again, we were talking about you simply can't sell here. Is it nice to be sort of straightforward, factual? That, like, the one thing I can tell you is you just can't sell here. Isn't that interesting? Do you think it'll trade like an inverse head and shoulders? I think if you were going to trade it north, you would do it something like this. Where do you stink? Yeah, Dre says thinking the same thing. Greg says spike and range. What I call is a, I call it that a pop and stop. I don't know. It looks like the yens want to go though. So it looks like the yen wants to weaken, and all our yen pairs want to go north. So whatever you were going to do, uh, it's cleared up, and you can do whatever you want to do. But if I recall, there's just, even though they're moving up, most of these things are already at resistance. So you have to buy the things that you didn't want to buy earlier in the week, which in of itself is less attractive, right? So you can see I already have this one set up, right? This is the buy zone. You see that? Okay. Based off the higher high. Sorry, this is, let me move this to sort of illustrate it. Wow. Ah, doop. Let's do it this way. Be a simple kind of man. Ah, come on. Everything's complicated today. Let's try this. There you go. So that's how I'm looking at it, right? The higher high predicts the retracement, then back up to another higher high. Okay. The target, if you're wondering, if you're taking Kiwi Yen north, is this cluster up here. The 618 predicts the 1382, but also we're using the pivots, right? So this is the monthly M4, which is the conservative target for the month, and the weekly R2, which is the aggressive target for the week. With all that being said, Leonardo Fibonacci and pivot points predict this stopping around 78.5. How does that make you feel emotionally? Kiwi's been a laggard. Dairy prices have not been amazing as of late. So, anyways, hey, good morning, guys. Good to see you. So, if you like how the webinar is going, feel free to open an account at tradersway.com, even a demo account. Just come give us a test, try us out, and we could trade together every single day. How does that sound? I hope you join my team. Alrighty. So I'm looking at the euro dollar still kicking off that big pivot. Makes a ton of sense. Also the psych level. My no fly zone for euro dollar is actually higher up around like 13, 14, 15. But hey man, the 110 makes sense too psychologically. No, there's no FIFO, no. Yeah, and you know what it is, and I don't even understand the logic of it, but um, a first in, first out rule, what it does is it kills your carry trades, right? And for some reason, I guess long-term investing is not considered desirable in the United States. You're like, what? Because think of this: if you built a portfolio of let's say yen trades, and I do this, um, you know, at the right time of the year, I'll do something like that where I'd like to be in dozens of trades if possible. And so you can imagine a scenario where some of your trades have 20 or 30 pips, and some of your trades have 300 or 400 pips profit, right? But they're all open. And then one day you decide, well, I want to take profit on my 20 pip profit, because let's say it's just a scalp. And you're like, yeah, I made a scalp. I want to get out of my winner with the 20 pips, but I don't want to get out of my winner with 400 pips. I plan on staying in that trade forever. But a FIFO will force you to take the one with 400 pips, not the one with 20. And you're like, but that's a scalp, and I don't want to mix that with my position. And whatever, they kill your ability to carry trade. Cool. Michael says Aussie dollar should rally, huh? Well, there's not a lot of good news going on right now in Australia. Gold prices are way down. Iron ore prices are way down. Diamond prices are way down. Beef prices are way down. I mean, there's just not a lot going on in the commodity world that would benefit Australia right now. I mean, things are a lot better than they were, but they're still not very good. Um, there was a bit of a spike there for a while as China stockpiled a little bit, but um, I haven't looked at an iron ore chart in a while, but the the last I looked at, prices had crashed. Okay, so with all that added up, I mean, I wouldn't expect a significant rally in Aussie dollar at the moment unless fundamentals change. And they might change, of course. But I would like to see it based on some solid data first. So if you could show me that, China was going to ramp up um, anything and need commodities from Australia, then I'd say, yeah, go along with it. I mean, look, Baltic Dry Index is much improved over the last 6 months. Okay. But it's still not stellar. Okay. So if you think Aussie dollar is going to go up, okay, that's good, but just make sure you're able to prove it. So um, let's just quickly pull it up here, since Michael talks about it, right? All right, so here's a scenario, okay, and this is a daily chart now, right? Right? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, sure. Look, and I guess we need to clarify the time frame. I've already said it like 10 times today that it shouldn't fall any further. So another way you could look at it is to say, well, over the next 2 or 3 days, it could rally up into here, in which you would just simply sell again. All right. And you can see the market's technically been bearish since the beginning of April. So all of these are sell opportunities, right? I mean, we already talked about that, at the beginning of the webinar. So now we've hit the target for the month. It should pause here, which means it'll either rally up into the roll reversal or wait for the 21 EMA to come and push it down to the next level. So if you're saying you think Aussie dollar is going to rally, well, I interpret rally as this. Okay. Now, if your use of the word means, retrace back to here, and then next week a lower low, okay, yeah, okay, that's plausible. But rally to means bullish when you tell me rally, and you'd have to give me more info. You're suggesting maybe that acts as support, or maybe this acts as support, something like that. Okay, well, I would also like some fundamentals wrapped in your analysis. You got to give me some more reasons, right? Because there's a lot of fundamental reasons. Like for example, have you read the meeting minutes from the Reserve Bank of Australia? If you had, right, you would know that it seems more likely for Aussie to be weak than strong. That's analysis that you could share, right? Well, looking at the export data, looking at economic data, looking at the meeting minutes from the RBA, these things, for example, or looking at uh, the trends in commodity prices, these things would indicate a bearish stance fundamentally on Aussie dollar. Now, technically, the reason you use technical analysis is to figure out when you want to sell, not when to buy, because this has nothing to do with that. The fundamentals put you bearish. So how about like across here, or across here, or across here, or across? You see, a sell, a sell, a sell, a sell. Okay, and that's how you combine a fundamental bias with a technical strategy. Okay, does that make sense, guys? Because I don't want people to say, well, you know I think it's going to go up, or someone said the other day that they read that some currency was supposed to go up. I'm like, what nonsense is that? What I'd rather hear is, your analysis of the fundamentals puts you into a particular bullish or bearish stance, and therefore technically, if you're a bear, you're looking to sell high at resistance, or if you're a bull, you want to buy low at support, and you're simply saying, well, I'm in a bearish stance on Aussie dollar, which is true, based on fundamentals, which is true. Is the market technically bearish? Yes, the market is technically bearish. Good. Am I at hardcore resistance? No, not really. Not quite yet. I mean, it depends on the time frame, right? But it helps when you wake up in the morning and you walk toward your computer and your PC's booting up. It helps as a trader for you to be thinking like, I hope I sell the Aussie today. I hope I get a chance to sell the Aussie today. I hope the Aussie is up today so I can sell it. I think if you ever are waiting for your charts to load and you say to yourself, I wonder what's happened. I wonder if I'm going to buy. I wonder if I'm going to sell. If you have that as your process, there's no way you're in control of what's happening. And control is the supreme, most important aspect of your trading, because control means consistency. Consistency brings confidence from actual results, right? So having made the decision 3 weeks ago or 3 months ago to be a bear on Aussie, that's the secret to your success. Also being, awesome at technical analysis doesn't hurt, but the bias is important, especially if you're going to be a professional trader one day. Now, also, if you've taken my swing trading course, you sold here on Monday and your target was here, all on Monday, if you were a bear. Okay? If you're a bull, you would have bought it here right at the open, and your target would have been up. And of course, by Wednesday, you got knocked out at break even. Okay. The key here is if you're bearish, if your bias is bearish. By the way, let me stand up a little bit. I hope you don't mind. Oh. All right. If you're bearish, okay, this is you as a professional now. You're a bear. This means you've made a decision, and you've built a PowerPoint presentation, right? And you talk to your clients. And your clients call you up, hey, what's going on with this? What's going on with that? And you could say, well, as you know, based on the presentation I gave you last quarter, I have a bearish stance on the Aussie dollar. And reviewing the fundamentals and updating them, our stance is the same. The tone of the members of the Reserve Bank of Australia in their last meeting has not changed. Looking at the risks in the housing market haven't changed. Looking at demand and therefore price for Australia's largest exports have also not changed. And technically speaking, when you look at the Aussie charts, whether it's Aussie versus the US dollar, for example, it's still technically bearish. So our stance is the same. Okay? That's cool, right? First of all, you actually sound like you know what you're talking about, and maybe you're worth the investment. But here's the other thing. When the market actually agrees with you, like for example where we are now, this top. See, it would have opened on Sunday and Monday morning in a bullish buy zone. But the thing is, if you've made the decision to be a bear, you filter that out. That is useless information. Another way of looking at it is it's fool's gold. If you're a bear and it opens in a bullish area, you could just say, well, some fool's going to buy that. And you're happy with it, right? Because you want it to go up. As a bear, you want it to go up. Why would you want price to go up if you're a bear? Because it would form a lower high. Now look, if you're a bear, you don't want price to go up if the market is making a series of higher highs and higher lows. The trend is up. You don't want it to go up in that case. What you're asking the market to do is like a double top or a lower low to create a lower high. Something like that, right? But when the market's making lower lows, you can't sell a lower low if you're a patient, disciplined, bearish trader. So you're begging the market to make a rally, a retracement up, because that's a mispricing. That's when the market is, let's say, inefficient. It's not going the correct direction. So now you can sell it high. Now you can sell it high at resistance. And right? And in this case, if you look at here where I said if you were a bear, this is where you would have sold on Monday or Tuesday. Okay? The cool thing is you would have needed to have waited, and this is exactly where a bear would sell. That's it. I mean, it's true. Right? I sound like Trump. It's unbelievable. Very important people, by the way. Yeah. Right? So, imagine this. When the market, because you're not in control of whether price goes up or down, right? That's for market participants. But you do have a control of whether you want to be a bull or a bear. And if you want to be a bull or a bear, now you're in control of identifying areas in which you would consider to sell or areas in which you would consider to buy, depending on your bias, right? So you're in control of all of that. And here's the thing, guys, because you want consistency in your returns, right? And you want a lower volatility in your portfolio, right? When the market happens to agree with you, you will do very well. Okay? If you sold here because you were a bear, You did very well. Okay. When you're wrong, guys, or let's say when the market doesn't agree with you at the moment, that's a timing issue, right? Fundamentals don't change overnight, but markets do ebb and flow. So sometimes the timing's off, right? But let's say you were a bull here. Now, realize it is a falling market. So it's kind of a tricky area to be a bull. But, it found support at this price all the previous week. So let's say you're a bull. Can you see because you bought at the right area, even though ultimately by the end of the week you were proven wrong, do you see how you would have either made money or broke even? That's a pretty good losing trade. That's a pretty good result for being wrong. That's a pretty good result for buying a falling market, isn't it? But only because you bought at support and you had a particular strategy, in this case a swing strategy, right? But what's more likely to happen on the long run? You if you are bearish fundamentally, but technically the market is bullish, you just don't get a lot of trade setups. So you sit and wait and say, well, it might be a quiet week or two for me, but once this rallies up and the market wants to roll over, I can get back into the game. So in that case, the market's going up and you want to be a bear. So you just say, well, where's the next level of resistance? And I wonder if I can observe a double top forming there. And I did this with Traders Way clients yesterday. In fact, we picked an area looking for a double top. And we're like, this is exactly where you would look for a double top to form, with the idea that you can prepare hours or even a day in advance for a double top because you're already looking for a double top. So imagine you're sitting there waiting for a double top and finally you get one. Now you can enter with less risk. And then, of course, eventually, hopefully it rolls over and now the market agrees with your analysis. Because you don't want to try to outsmart the market, even though the market's stupid. The market's too big and too powerful. The market can stay irrational longer than you could stay liquid, right? But you can prepare for the market to finally figure it out and get on board with your trade. Okay? And again, now you also know to let winners run. Does all that make sense? Just want to check the time. We got about 15 minutes before the stock market open. You know what? Give me a what? Give me. I need a 1 minute break. I'll be right back. Okay. Thank you very much. Michael says he's biased. That's good. Think about it this way. Like if you guys want to become a professional trader one day trading other people's money, they pay you to be opinionated. Right? You need to be opinionated. Let me tell you what gold's going to do. It's important though, right? What's oil going to do? I can tell you everything you need to know about oil. I know exactly where it's going. I know exactly what you need to do. But of course, you don't want to make it BS. You want to be opinionated based on really hard work, right? Blackhead says, I thought you made money. Yes and no. Okay, yes and no. I mean, I guess it depends on who you're working for. If you're trading, your grandma's $25,000 account, then okay, yeah, sure. But there, life is more complicated and more sophisticated. Like when you have a professional investor, they have lots of opportunities to make money, right? They're already making money. It's just like, well, they could go with you. They could go with a hedge fund. They can go with some sort of program. They can do this. They can do that. Or if it's an ultra high worth net individual, they could give you $30 million, or they just buy another boat. I mean, but there's always people to make money. But why would they choose you, right? Because they need answers. It's a complicated world, guys. It's a very complicated world. There are lots of concerns, and you need to help the concerns go away. And you need to be the person that they come to for advice, even if it's not necessarily a trade you're going to make for them. They're like, oh my gosh, well, what's going to happen with this? And what's going to happen with that? And what do you think about this election? And what do you think about the North Korea thing? And what do you think about this? And and you're like, well, let me tell you what I think and why I think it. And they're like, wow, you're a pillar of strength. You are a shining light in a world of darkness. You is wicked smart. Right. preach it, preach it, dude, bro. So, anyways, hey, so we got a couple of minutes. Well, I guess we got 10 minutes before the stock market open. So, what would you like to discuss in our last hour together? And by the way, get ready for that double top on euro dollar. And if you'd done just a simple scalp short off of the pivot, you may have already taken profit at the roll reversal, but that's your call. Oh yeah, the rig, my computer rig. Yeah, there's nothing special about it except it runs a lot of screens. Um, One thing I can tell you though, the TVs that I have running, I run them on a second PC in hopes that it doesn't, drain my processor bandwidth or whatever. So that is on a different machine. Everything else, the other 16 are running off the. It's actually a workstation. Not super happy with it though. And I think it's mostly Windows and now Adobe. I think Windows and Adobe have gotten together to really ruin the world. Microsoft has been, a couple of decades ahead. They've been ruining and stifling innovation for a very long time, but Adobe's jumped on board. How do you see Kiwi? I thought we did Kiwi already, didn't we? Yeah, we can go back to Kiwi. Uh, the biggest thing on my mind with Kiwi right now is the world is flooded in milk. So clearly we didn't do it on this chart. Uh, right? So with milk prices not likely to go up. So let's step back a while. Um, there was a shortage of milk a couple of years ago, and so we brought more cows online. It's similar to oil. Let's go back to oil. When oil was $200 a barrel, what it did is incentivized um, it, companies to explore for new supply, but it also incentivized entrepreneurs to find new ways of drilling, faster ways of drilling, more efficient ways of drilling, and like in the way of fracking, a way to go back to old dried out wells and squeeze blood from the stone, right, to produce even more. And what that does is, so you go through this period of not enough supply, but it incentivized the capitalist market to find new ways and new sources. This is why socialist, pig dog, communist economies fail, because there's no incentive to do any of this. So, anyways, now the consequence of it is all of a sudden, with all this investment made and improvements in technology and an additional supply found, all of a sudden, da, 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 whoa! You wanted more oil? Now you got more oil, right? And so oil prices have collapsed because now we have too much oil, but we went 5 or 6 years with not nearly enough. And the capitalist free market system works. But you get a boom and bust because now everyone was producing to get the $150 a barrel, but now it's 50, right? So whatever. Now, the same thing happened with cows. There was a shortage of dairy and lactose products globally. Um, So we brought more cows online. Entrepreneurial cows, right? The Shire is filled with cows. But what what's happened because of that is that now there's too much supply. Okay? So and just in case you don't know, um, dairy exports out of New Zealand have a large impact on the on GDP from that country, from that economy. Okay, so that's the answer to how do I see the kiwi. As long as their exports are not fetching good prices, they're not going to do as well as you would like. Okay. Now you might want to tiptoe into it. You might want to be a yield hog and find ways to tiptoe in it anyways. And I'm okay with that. Okay. If you want to do it simply for yield, I'm cool with that. Go ahead, bro. Okay. Just make sure you're buying low. So there are trades on this. So like, how do you want to do it? How do you want to do this? I guess we do the 4 hour, right? We'll do it here. Um, you can see the market's been depressed for quite some time, like basically all year, right? But there is an opportunity if you're willing to take the risk and manage that risk. So you could be in a situation where you say, all right, the worst is over. It may be dairy prices have been down for a while, but eventually they're going to get rid of some of the cows, right? Eventually we'll draw down supply. Do you know Americans, they don't eat healthy at all anymore, so they don't like eat cereal in the morning. When they did eat cereal, it would be like milk, sugar, and some sort of wheat or corn product, but it was mostly sugar. Now they don't even eat breakfast. I think they just, I don't know. I like the European way, right? You wake up, you have a cigarette and a glass of wine. Counting the days to the next strike. All right, so anyways, you could try to tiptoe your way in. And what you do is you get in, jam the stop, let it run, right? Because your entry is simply no longer down, therefore maybe possibly up. And of course, if the fundamentals shift the other way and dairy prices improve, okay? Or how about this? The Australian economy picks up and trade with Australia picks up in New Zealand, that kind of stuff. Then maybe you can start to, maybe you're early in the cycle. I'd caution you about being early in the cycle, but you could totally do it. But don't be shocked if it comes all the way back down and knocks you out here, and you earned your yield, but you didn't earn any pips. I think it's a little early in the year to be position trading, but that's going to be your call, bro. Is that right? The 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 British are the English are big cereal. I thought it was like marmalade and crumpets. Okay. All right. So after all of that, DRMR says, "Hey, is this a good opportunity for Kiwi yen right now?" Well, are you selling or are you buying DRMR, Dr. Mister? Tell me. Let's walk through it together. Come on, DMR, DRMR. Can only wait so long, DMR, DRMR on YouTube. Do I ever look at Bitcoin? No, I live in a rich country, so I don't need that. If I lived in a poor country, maybe. All right. DMR says more buyish. More buy. He wants to buy. All right, DRMR, thank you for that. All right. So you want to buy. Are we at support or are we at resistance in your opinion? I'll just have to do it like that. Dr. Mister, yeah. Yeah, of course there is a lag, of course. All right. I think I know your answer. It should be resistance. So therefore, your question to me, is this a good opportunity to buy Kiwi yen? No. Right? Done. See how easy trading is? What would be a better opportunity, you say? Well, I'm going to change this up a little bit. I'll do clusters. Let's do clusters. Okay. Now, one thing you should be, if you take the training course, by the way. Oh, you know what? All right. So there's a swing trading course on FX Bootcamp. It's $1,000. It ain't cheap, but it's awesome. If you have an account at tradersway.com with more than 500 bucks, the support staff will give you a coupon code that gives you $500 off that course. Just a heads up. The reason I say that is your best opportunity for a swing long on this Kiwi yen is probably going to occur Monday morning, and you'd need to know how to swing trade to do that. But that's something that I would look for if I were me. You could try to micro fib, like you could fib this fib, but let me tell you why that may be a problem. Okay, we already know this is a fib long, and you might say, well, we could fib this, and then maybe it'll fib up there. But I think what's happening is you're going to get a reverse fib today. Oops. So it's not a bad idea to be a bull on this. You don't have a lot of fundamentals, but you can try to do the technicals. You see how this is a sell zone for short-term bears using like 5-minute and 15-minute charts? I mean, look, you can see how precise their entry is. So you want to buy a dip, right? And I'm thinking you'll probably get that. You'll probably get that Sunday morning or Monday morning, right? And take it north off of that. But, you know, again, you'd need to know how to swing trade. All right, hang on. I'm enjoying a coffee. So this is a caution area. This is called, or what we refer to as fib wars. And this is where you're going to get slaughtered. Okay. But maybe this drops down into here today, let's say. Let's say before the close, we drop back down into here. And maybe you take it long off of that. Okay. But I think I'd really like to swing. And that'll require next week's pivots. Okay. So I guess, you know, long story short, look, if you've decided to be a bull, identify 2 or 3 levels of support in which you would consider buying. I mean, maybe how about the psych level at 77.50? Okay. Yeah, how about that? How about the 3A2 that I have indicated here at more like 77.33, right? So now you have like, maybe you'll buy it at 77.55, maybe you'll buy it at 77.33, or maybe you wait for the market open next week and look for a swing entry on weekly pivots. Okay. By the way, speaking about the swing trading strategy on the course, did you know on Monday morning this is a bullish buy? Do you know what it targets as the top of the week, the projected target for the week? That red zone. Now, I would have hoped, in fact, that we would have had a more bullish week and we would have made it up to 78.55, but the actual target is 78.10. And this started at 76.40. So you should be in around 76.50 if you traded the Sunday morning, right? So there's 100 to 150 pips on this. All predicted a week ago. Okay. This is a crazy counter trend setup, and I only have 2 counter trend setups. And that predicts back to the central, which it got here, but it actually went a little lower. Okay. And by the way, you get this indicator too if you sign up for the course. You get the indicator. So you'll also know the top and bottom of the market days early. All right, moving on.com. Yeah, that euro dollar's come down off that top. How beautiful. Let's take a look at that again. Some of you guys got that too. Shorted it right off the short, right? Right off the line. Okay. Now, does anyone recall me saying wait for a double top here? That a conservative trader would look for the double top? Then let me outline the second chance. This is called a second chance. If you've heard me talk about a role reversal, that's what a role reversal is. Another example of a role reversal is in here. So we're caught in here. I can see there's a conversation going on about education and stuff, and whether having a good education is important or not. It is important. All right, look, if your investors have like 10, 20, 50 grand, 100,000 bucks, okay, maybe not. They're really investing into you because they're not sophisticated investors, and they're really investing into you. And then they'll look at the track record, but they don't actually know what they're looking for. So again, they'll just look at something simple like you say, well, look at this. I make 22% per month. I made 150% last year. And they're like, really? All right, here's all my money. That's not a very sophisticated person. And that's not how professional investors work. That's not, yeah. You know, when you think of someone that is a high net worth individual, they have staff, they have support, they're already in sophisticated investments. Um, you know, they send due diligence teams and such. And they're not looking for returns. In fact, your high returns, are laughable. A lot of they're not really even interested because they're looking at risk-adjusted returns and all this kind of stuff, right? And correlation, and they look at things a lot different. And they're usually very sophisticated people themselves. So I don't believe my Harvard degrees would hurt me. I think you would agree with that, right? They're like, oh, 2 degrees from Harvard? Well, forget it then, right? So, is it necessary? No, but the higher up you go, the bigger the money gets, the more sophisticated it gets, which would then require a lot more education. And it seems to me the people that control, a billion, 2 billion, 10 billion, 100 billion, that kind of stuff, they're usually highly educated people that like to hang out with other highly educated people, right? But at the end of the day, if you can't trade, you can't trade either, right? Okay, uh, this 1 minute cycle's done. The 5 minute isn't quite ready yet. Now, don't forget, we got some news coming up. I think it's just manufacturing, isn't it? It's not even services. We're like way off, aren't we? We have PMI, IV PMI for the kitty cat. Killer. Could be a great opportunity to sell some more CAD. What do you think? Smell like a plan? Black Cat says, dude, at the end of the day, it all boils down to result. Okay, yes. But what kind of results? Often, and we've had these conversations, I think, probably every NFP, so we don't even have to get into it, but this idea that um, that high returns is what an investor looks at, only if they're foolish. Okay. There are many more important questions that a sophisticated investor would look at and would want addressed. And a high return is not actually desirable because what they're going to look at is the risk. So you're like, look at my returns, look at my returns. And they're like, well, yeah, we'll look at the returns later. Let's start with the risk. And they start looking at the risk and they're like, forget it, we're done. And they pack up and they're leaving. And you're like, but I made 150% last year. Yeah, well, good luck with that. Go talk to grandma. Maybe she'll loan you some money. Yeah, well, Black. Okay, Black. Here's what Black Cat says. If your trading results suck, dot 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 dot. Well, yeah. Look, no, how could you possibly be a professional investor and your track record sucks? So, like by definition, you can't suck. You can't have bad results. You would be removed from the environment. You're kicked out of the cool club, kids club, right? I mean, come on. If you're a professional, it's assumed you can make a return. Now, the real question is, what did you do to earn the return? And how does that compare to the market in general and to other opportunities that the investor is also considering? Okay. All right. All right. 15 minutes. So IVPMI. So we got the kitty cat going here. Okay. So why don't we go through here and identify some levels of support and resistance? Okay. You know what this is? Okay. Okay. That is a lot of resistance. Yeah. So Black Cat says 2% a month with a maximum drawdown of 0.1. Yeah, that'd be fine. That'd be about average for a CTA according to Barclays Hedge for for macro or managed futures. That'd be about right. So euro dollar's thinking about challenging the pivot again. Black cat 9, life short, days long, nice. Living on the edge, not afraid to die. Oh, on the euro dollar, what pivot? Well, the one that created the double top already. Okay. Whether it gets squeezed and pops to the next level, I think it was only an M4 though, right? So there's another one up there at R2, but oh! All right, so IV PMI should move the kitty CAD. You know, do you want to sell an up move like this? If you were to sell, I would want it to go a little higher up into here. But then it's still dangerous because you're selling a rising market. Okay. But what if you wanted to buy this? Well, you got a 4-hour 21, which would be a very interesting little entry if it gave it to you. Right? So let's mark that just for fun. And then drop into what, a 1 minute or a 5 minute? Okay. And then look for psych levels. There's no pivot here. But you might want to wait for the news, and then if it spikes and drops, and then you rally it up. But even then, if it spikes and drops, this area right here, let me get it for you. 133.16. No, sorry, that's an 8, I think. I can't quite see. 138.16 to 138.22. That area, I would highly recommend, if you happen to be in it, to take profit. Why am I talking about CAD? Because we have Canadian IVPMI coming out in just a few minutes. And I think it's more important than ISM manufacturing. All right. It's only like, what is it, 15% of the US economy has to do with manufacturing. 70% has to do with services. So I think we'll trade the IVPMI. TomTom says, do you pay attention to candlestick patterns to confirm your trade? Or, you can, but I think some people spend too much time trading a candle. Like, think about it. Like, the most important thing is price. That's what's most important. Hang on. All right. What the heck was I saying? Yeah, I got distracted with a Skype call. Yeah, is it Ben Bernanke? Yeah, he wants to do an interview to promote his book. He's willing to talk to anybody. So are we going out for drinks later? Celebrate my birthday? Oh, candlestick patterns. Yeah. So the most important thing is price. So look, you need to make a decision at what price you want to pull the trigger. How you pull the trigger is going to be a personal choice, whether it's a 5A cross, whether it's just one touch, whether it's a working order, whether you need candlestick patterns, whether you need price action. So I guess the real answer is I prefer price action over candlestick patterns, but I have no problem with candlestick pattern. But there's a guy that wrote a book on candlestick patterns. I think he charges like $500 for the book, $5,000 for the course, and I believe it can be boiled down to if you see a reversal candlestick pattern at support or resistance, trade it. If you see a reversal pattern not at support and resistance, don't trade it. So you could say, well, couldn't you just trade at support and resistance? Right? So I think having made a decision, knowing where you want to buy or sell is the most important thing. And then whatever you need to feel comfortable that that level is held and that you have some sort of validation of your price level, then that's fine. I don't need to say who it was. I might upset somebody. They might have paid $5,000 for a weekend course. Thank you, Senny. Yeah, too bad we can't just meet up for drinks and a cigar after, huh? Wow, this is taking forever for this news to come out. Yeah, I try to stay away from the beer because it's amazing now that I'm a man of a certain age. If I drink 1 pound of beer, I gain 2 pounds of fat. It's amazing. Yes, George, the candlestick patterns form due to price. Right. It's true. I mean, that's what it is. It's like, don't get caught up. It's not like a video game, right? You're like, you're waiting for these patterns and that something has to result of this pattern. What you should be looking for is where humans want to make decisions. You need to identify areas in which a bull would want to play or a bear would want to play, or where a bull would want to take profit and where a bear would want to take profit. And then when they actually make decisions and act, it will influence how candles will form. So the formations of the candles are already after the fact, where you would do better not waiting for candlestick patterns because, well, they already happened. You're already looking backwards. As far as, as compared to identifying levels in which these things would occur based on basically human decisions and being there ready to act and participating in the action reaction, you know what I mean? And not just trading sort of like noise, if you will. Am I vegan now? No, I was vegan many years ago. About just over 1 minute, maybe 90 seconds. Did you guys trade the peso? I've taught you guys how to do that in previous non-farm payrolls. There's also a video on YouTube. I think it's like a 12-minute video on YouTube, how to trade the Mexican peso and why it works. And here's the entry. And it only worked for a day or two, but it's only supposed to work for a day or two. Sometimes it lasts longer, but we don't really know. All right, 64, better than, or sorry, 62.4, better than expected. So maybe some kitty cat love. It's gotten a lot of punishment lately. I'm looking at CAD yen. It's okay. CAD yen, it's in the middle of a range though. I kind of feel like these things need to break out and pull back on Monday or even Tuesday. Okay. So remember, I got a little line down here. Do you remember what this was? This is the approximate area of the 4-hour 21 EMA. So I'm thinking maybe this comes down to the psych level. 37 is about here to here. This area here might be a buy zone if you want to wake up and sell your CAD. And why not? Right? And we didn't hit the weekly target, or sorry, the monthly target yet. So there's room to the upside if it wants to keep going. We don't know if it needs a pullback before launching up, but there's one way to find out. Be ready to buy the dip. Hey, David, what's up? Mr. Piglet, how you doing, buddy? Cool, man. Mr. Pegley in the house. Good. Right on. I was looking at old pictures the other day, David. I forget where I saw them, but old pictures. It was the coaching staff, and we were doing a boot camper jamboree. I'd rented some pet house at I think it was Mandalay Bay or something like that, and we had all the boot campers around, and we had this agenda, right? Oh, we're all gonna talk about some things, and so we started. All right, everyone, spend 15 or 20 seconds, introduce yourself and your hotcom room name. And like 3 hours later, we just barely got around the introductions, and people were crying. And yeah, it was yeah, Fat David, you know, yeah, but yeah, I remember, but it was great, right? Remember that? People are like, "Oh, I love you, man. This is the greatest day ever." People were literally crying. I don't know what I'd do without you guys. Trading forex is so hard. I love you. Yeah, good times. All right, so we got Ivy coming down. See, that's the thing. So it's dropping. So do you want to scalp it short, or do you want to prep to buy it off of a 4 hour 21? Are you going to treat it like, I don't know, you could roll reversal it? I'm really feeling like this needs a day. This needs a Monday. This needs a Monday, man. Monthly pivots, like I said before, we're not really playing these pivots at the moment. You can see they're not really acting as support or resistance. Even weeklies are even not that accurate. So this is just a flow of uh, of fundamentals, right? This is very similar to the Aussie dollar where we talked about it before. Low demand for Australian exports, iron ore, coal, gold are three big ones, right? Um, the prices are down, the demand is low. Well, think about, Canada. Not only are their commodities down, but there's discussion of trade wars with Trump and Trudeau and, just not a lot of love going on for that Canadian dollar. Yeah, David, hey, can you do South Africa more like November? We've got something that we're trying to plan out in Joburg. Not Joburg, Cape Town. Okay, we're right on the line, or I shouldn't say right on. We're awfully close. Oh, I guess we are right on the line. So this is simulating the 4 hour 21. That's what's going on here. There's also a psych level that might be tradable a little lower. So it's just what you want to do. Okay. I think I'll wait to sell it later. Oh, all the yens are moving. Whoop, 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 whoop. Hey, man. Yens are moving, yens are moving, yens are moving. I was in some good yen trades last week and decided to be conservative, got out of them, and I still did the right thing, but yeah. I got out at the R2 as I'm supposed to. Tricky to catch this week unless you're just playing moving averages. But the funny thing about a trending market is, you know, if you're entering after it's formed, you're often buying it overbought and hoping it continues up. And it's like real estate, right? When the market's hot, you almost never get a deal. Oh yeah, yeah, I'm always around, David. South Africa was cool. It's a frustrating place though, isn't it? Because you're like, this place is awesome, the people are great, the country has so much to offer, but you can't live on potential, right? It's like, why isn't it 10 times better? That's the frustrating thing with South Africa. You're like, this place is great. So much potential. All right. So anyway, so you can. Oh, you know what? I just deleted that. Anyways, this is my trade from last week. Um, Bought the gap and then up, and now it's just rolling to the next level. But these are dangerous pips. I hope you appreciate that. Even though it's going up, they're dangerous pips. There's not all pips were created equal, but sometimes you got to be aggressive. But then I would move it quick there. Yeah, yeah. David's like, you can have a 9-course meal. Yeah. Or I love it when like the sommelier comes out to show you all the fabulous local wines. They're right. Oh, we have this bottle and we have this bottle and oh, this one is fabulous. You'll love this bottle. All right, I'll go with that one. You know, a whopping $11. Like a sommelier selling an $11 bottle of wine. Yeah, South Africa. Yeah. So hey, man. Yeah. Well, of course, I always stock up for my collection of ostrich eggs with Nelson Mandela's face on the side. I have dozens of them. I just can't get enough ostrich eggs with Nelson Mandela. I'm going to corner the market. When I'll die, there'll be a museum. All right. So, anyways, lots of risk up in here. And maybe it's just a non-farm payroll thing, but it started. The day just started with everything at bad levels for trading. Like that is not a good level at all. And I don't want to buy euro. I don't care. You say euro's going up. I say good. You can have it. In here, this is a take profit zone. It's only an MR1, but it is a WR2. I don't feel like counter trend trading either. So this just tells me it's no good. And if we go back to that Aussie, remember the Aussie dollar was just like that? I think we had it here. Aussie dollar was the same thing. Like I want to sell it, but I can't sell it there. So when do you sell it? Well, you sell it when you believe it's the right time to sell. All I know is it's not the right time to sell. So there is like, here's this thing. Like, do you remember after the rally, I said, look, if you were going to buy it, I'd like it to break out and pull back. It didn't even break out, right? So I do want to sell this. The trend is down. The fundamentals do say down. If you read the meeting minutes, it says down. Everything's fine. It says down. Um, but I think if anything, something like this would happen, right? And Monday, the moving average drops and we just resume to next new pivots. I can't even grab this. There we go. Right? And we get new pivots next week and I'll swing this down. But we are very close, very, very close to the monthly target on the downside. So, it's a frustrating scenario. South African rugby jerseys. Yeah, from the World Cup. Beast is just killing it, man. Beast is gone. That euro's gone, but I don't want it. I don't care. All right, come on. Let's give me some Oh yeah, CAD's still moving it. Nice. All right, give me some questions, guys. We got 15 minutes. Let's squeeze some juice out of this. How can I help? What do you want to? Kazakh? Yeah. What do you want? How do you what do you want? Let me ask you something. How many people here actually read the meeting minutes released by central banks? RBA, BOC, Fed, BOE. Because there is a lot of interest, a lot of interesting things said and discussed by these groups. At the very least, let's say you were trying to raise money to start your own forex fund, and you are talking to investors. Okay, doesn't it just sound good to say, oh well, yesterday I was reading the meeting minutes from the last Bank of England interest rate decision, and I saw blah 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 blah. And at the very least, your investor says to himself or herself, wow, this dude is on the clue train. At the very least, right? And then what you should do is like circle things you don't understand and all that kind of stuff. I mean, what other things do I look at? Like Fed Fund Futures Watch, right? You remember the meeting, the Fed meeting on Wednesday? The news was, all hyped on TV. And yet we knew there was like a 96% chance the Fed was not going to do anything. And guess what? The Fed didn't do anything. 64% chance that they will move in June. But, it's nice to kind of watch the Fed funds futures market. Baltic Dry Index, we discussed earlier today in regards to exports out of Australia because iron ore and coal would be on that index. Do you guys ever look at the railroads in the United States to discern economic activity in the largest economy in the world? We talked about dairy prices in regards to New Zealand. I watch that every 2 weeks. We get the dairy auction. How about what the railroad? What is it? Railroad Association. So what the Railroad Association, or I'll get the exact website, um, Association of American Railroads. You can look at their data, and they actually tell you week over week how much activities happened on the rails. Let's see. I don't think this is going to show, right? I have to include this as an input. Hang on. Add media source. No, it's a window, isn't it? Add window capture. No, that's going to not work. Discard. And it added it anyways. How do we get rid of that? Enable, rename, remove. You sure? Yes. Ah! So it killed the charts. Ah! Stupid system. All right, I'm getting used to this stupid system. Hang on. It's not stupid. You're stupid, Wayne. All right. Add. Display capture? No. It is a window capture, isn't it? Add window capture. I have to go through all my windows now. Traders Way live account. Wrong one. Cancel. No, I think I can change it. It pulled up my 6-screen live account. How about this other one? How about the one screen? Sorry, guys. See, if I drag a browser window over the charts that you're looking at, you still don't see them. So I have to add it somehow. So how do I, so it's not a window, it's not a media source, image, display, browser source. Add a browser source. This is way overly complicated. No. OBS Studio now, got to delete that. Gee whiz, way overly complicated. Just trying to show the web browser I'm looking at sitting on top of this Aussie dollar chart. Window capture, window capture. I guess it's a Chrome Home. Trade the news. Chat. I don't know. I don't know why it won't do it. This is supposed to be the browser. I don't know why it's not showing it. Well, forget it. So anyways, you can go to, for example, oh, like, did we lose my webcam and everything? There I am. All right, so you can go to the American Association of Railroads, for example, and track weekly activity on the railroads. Obviously, more activity on the railroads would indicate economic activity. Like the Baltic Dry Index tracks shipping containers, not shipping containers, not Baltic dry goods like iron ore and coal, not oil and stuff. Okay, this gives you economic activity. There's, there's a lot of things that you can include in your alpha that help you discern whether the economy is improving or not improving. Oh, planforbeats.com says, Wayne, do you really need all those monitors? Yeah, I do. It's it's better. Why is the yen so weak at the moment or recently? That has to do with the end of repatriation flows. As you probably know, the fiscal year end for Japanese businesses was April 1st. So there's typically repatriation flows um, before that and then just after that. And if you go back in your charts between the 12th and the 14th of the month, most of the end pairs bottomed out, and that would be due to seasonality. How many people saw the interview I did in December? I was on a Caribbean island with a volcano behind me. I was wearing a three-piece suit. I had a meeting set up with the central bank and the local government, and I did a full interview for an entire hour. Did anybody see that? And the cusp of the conversation had to do with enjoying all the yen pairs rallying. So this was in Nevis. And for Traders Way clients, a day or two earlier, I was in St. Martin trading Forex on the beach. And those people saw I was in like 30 trades. I'd made like, I'm traveling through the Caribbean and I was up like 1,000 pips for the week or something. I'm like, those are good pips. All of a sudden I'm in Nevis and I do this, right? And so my point was all the yen pairs were going straight up like a rocket for weeks and weeks and weeks since the Trump election. And we were killing it. And then I'm doing this interview about the 14th or 15th of December. And I say in the interview, oh yeah, the yen pairs are up. I'm loving it. I'm getting ready to get out of all my yen trades. And I'm preparing to buy all that yen back. And I'm going to dump all the yen pairs for at least until the third week of June, or June, sorry, at least the third week of January. And then I think it'll do a false rally for a few weeks, and then it will fall again into April due to repatriation flows. This is December, and I'm talking about April. And I think it's pretty accurate. I think that's pretty much what happened. Thank you for the link. Now, think about it. What kind of idiot can talk about the ebb and flow of what the currency markets are going to do for the next 5 months with reasonable accuracy? A survivor, a killer, a lover. So here's the thing. Does it require brilliance? No. There was a conversation earlier. Do you need an Ivy League degree? No. But you better do the work, my friend, and you better fall in love with doing the work. If you're trying to cut corners, like you don't read the meeting minutes, you don't review Baltic Dry Index, you don't review technicals and fundamentals of oil, right? So on and so forth. You're just not going to succeed. If you're trying to get away from that work, you are not going to survive. It should be a passion of yours to do the analysis. And like I said earlier, if you want to manage money one day, making money is sort of like a given. Making money without risk is really what people are wanting. But ultimately, to do that, to lower your risk and get reasonable returns, you have to have done the work. You need to be the one with the answers. Your clients turn to you for answers. You need to be opinionated. I've done the work and I know what's going to happen. If you can't get on TV and talk intelligently about your industry, then you don't have a chance. If you can't talk in an interview for an entire hour explaining what's going to happen in the next 5 months and why, then maybe you don't know what's going to happen in the next 5 months and why. How can you know? I've done the research. Do I know for sure? No. Do I have contingency plans for if I'm wrong? Yes. Did I see Brexit coming? No. But it happened and I had to adjust. But can you plan? Do you have a 3-month outlook? Do you have a 6-month outlook? Probably not. And if you're searching for consistency, if you're searching for profitability, and you don't have a 3 and 6-month outlook, then maybe this is why your success is eluding you. Now, really think about it, right? If I can talk about the market with reasonable accuracy, with logical, intelligent reasons why it would behave this way for 4 or 5 months in advance, clearly I have a 6-month outlook, right? I must have already thought about it. And what kind of trader says, well, I don't know if it's going to be today or tomorrow, next week or next month, but I'm preparing to sell the market that I've been buying? I could have just said, oh, I'm so successful. I've been killing it on the yens. I'm up thousands of pips. This is so good. No, I'm like, oh yeah, look, the market's been up. I'm preparing for what's happening next. I'm preparing for what's happening next. It's middle of December. I'm in the Caribbean. But I'm thinking about January. I'm thinking about February. I really ponder about what's happening in March. And then what will then happen in April? Why? Why do these things happen? What will I do? What will I look for? And maybe it's these things that lead to success on the long run, isn't it? Loving the analysis and being able to fold that analysis into a strategy, in a plan, and then ultimately into a trade. I want you to fall in love with that process. Watch the interview. See if I actually say all of that. Okay? And then if you do think that I describe the market reasonably accurate, right, for 20 weeks in advance or whatever it is, then I ultimately, or I think, how about that? I think if I were me, in this case you, if I were you, I would immediately say, I must have a 6-month outlook. Do you understand? You say, because this is what I did back in the day. I didn't know how to be successful, so I decided to try to figure out what a successful trader would be doing and then just mimic that. So if you believe having a 6-month outlook would be helpful to your trading and improve your results, then you should say, well, I need to do a 6-month outlook. What kind of things did Wayne talk about? All right, if I'm trading the CAD, I need to go to the Bank of Canada's website today and start reviewing their reports. I need to start reading their meeting minutes. I need to look at the economic data. I need to know what the major exports for Canada is. I need to know what kind of economy it is. I need to know what's going on at the ECB. I need to know what's going on at the Bank of England, right? And start doing the things that are required to have a 6-month outlook. You should have a PowerPoint presentation that says Great British Pound. Next thing it should say, are you a bull or a bear? And then 3 bullet points why you're a bull or a bear. And I'm telling you, the longer you delay doing this type of work, the more you're robbing yourself of your destiny. Don't think of reasons why not to do it. Think about reasons why you should do it. In fact, you should love it. So I tell you every weekend, right? I'm like, hey, you need to be on Sunday afternoon. You need to tell your buddies at the barbecue, that thanks for everything, but you got to go. Asia's opening. Do you know I actually had that conversation with a friend? I'm standing on his driveway. There's kids everywhere. My kid's riding a little scooter and stuff. And I'm like, you know what? We got to go. Have a wonderful weekend, but Asia's going to open up in an hour, and I have to be ready. And he's a professional investor, right? And he's like, really? What are you gonna do? And I swear to you, I said, well, I get new monthly pivots, I get new weekly pivots, so it really depends. But a few hours after that, the oil market's going to open and I'm going to dump oil. I swear that conversation happened. It really did. He's like, you're going to sell oil this week? I'm like, yeah, I'm going to sell oil. Did you notice it dropped from like $50 to 45 or something? And I was joking on Monday or Tuesday or Wednesday, whenever when the first wave of oil falling happened, and I said I'm going to get a lot of bro points. Here's a friend of mine who's a professional money manager with decades of experience and certifications up the yin yang, and he's like, "Really, you're going to sell oil?" And I'm so happy oil tanked this week because he's going to be watching it on this charts and going, "Oh my God, Wayne's a genius." But the thing is, I walked away from the fun on a Sunday because I had something to do and it wasn't a burden. I love doing it. And B, I knew exactly what I was going to do when I wanted to do it and at price I wanted to do it at, which means I had done the analysis. I have a plan. I know what I'm doing. I'm in control. And everyone else with all of that is a liquidity event. Because unfortunately, you guys are up against professionals in this market, right? And it's a zero-sum game. If I'm planning that hard and I'm putting that much work into it, you might be competing against me. I might be on the other side of your trade. But I'll tell you, I deserve the success. I've done the work, right? So I'm trying to motivate you to do the work. Slow the trading down, increase the amount of work you're putting into it, and fall in love with doing it. This is now the beginning of the 12th year, isn't it? Or 11 years? I've done it more. Yeah, I've done this webinar now for more than 11 years. This is our 12th year of trading non-farm payrolls live. Are you going to be around 12 years from now? Then you better fall in love with it. You're going to sit at your desk like I'm doing now, 12 years from now, doing the same thing over and over and over and over and over and over and over again. And if that makes you excited, marry it. Fall in love. Don't be afraid. And I'll be here with you. So peace on earth. May the pips be with you. May our profits be above average. Thank you to FX Street for hosting us. And also, look, if you want to hang with me every single day, simply become a client at tradersway.com. Open up a demo account, test our execution speed, take a look. You might want a variable spread. You might want a fixed spread. You might want an ECN account. You can choose. Okay. And if you do want to take the swing trading course, there is one at fxbootcamp.com. If you have a $500 more or greater account at Traders Way, you get a $500 discount on that. And I hope you have a wonderful weekend. Nick saying oil is having a big rebound today. Yeah, well, it's the end of the week. So you got to take profit, bro. Plus, we also talked about it being at support. And we also talked about oil was actually on my target. I guess we can bring it up. Like, for all intents and purposes, oil was done. Mission achieved, mission accomplished. That's been booked, bagged, and tagged. I have it pointed up actually right now. Okay? This $44.86 was the predicted low, the predicted bottom for the month of May. So I think what we talked about earlier is, wouldn't it be interesting if you traded it from 45 back to 55? Dre says he has more than 500 bucks in his Trader's Way account. How you get the discount? Contact support and say, hey, I have a live account. Could I have a discount to the FX Bootcamp training courses? And they'll give it to you. Yeah, Black Cat says for most traders, statistically, very unlikely most of us will be here in 11 years. And you know what? The other thing I've learned after doing this for so long, 95% of people, maybe even 99% of people, listen to exactly what I have to say and make no serious changes in their behavior. And I understand that there's a form of entertainment to what I do, and that it's nice to have someone around with you every single day, day after day. Like, I don't take days off. I don't take sick days. I mean, I'm honestly here. I don't take vacations. I mean, really, in a decade of doing this, I just don't. So I'm here every single day, and there's something nice about that, right? Like Ryan and David just both happen to be from South Africa, right? But I'll tell you, these are two guys I can think of right away that are very serious, hardworking, loyal, disciplined gentlemen. And they do whatever it takes to succeed and grow and learn as human beings. They're two of the nicest people I've ever met in my entire life. And they're really, 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 really good at what they do. And when I first met them, they knew basically nothing about currency trading. They knew some charts. They did this, they did that. And now they're the best, world class. And I've seen people grow from a very modest start into very solid traders and technicians and analysts and I don't know, confident people, right? And so I have seen this success. I have had people do things like buy their parents a home, retire from their job, and move to um, a a meditating retreat for a year to create new life goals. I've seen it all before, but it's not many people. Not many people do it, as Black Cat says. And you just have to be comfortable with that. I don't think it's me. I think what happens is 97%, or let's say 95% of people are not willing to do the work or are incapable of doing the work. I believe almost nobody here is going to bust out a PowerPoint presentation and write down their bias for even one currency, US dollar, and put down 3 bullet points of why you're a bull or a bear, and have a 6 month outlook for that dollar. I think nobody's going to do it. But that's it. But it's what I would do. It's what I did. It's what I do. But I think if you do the work, it's going to lead you in a direction of success. Like, I'll take Ryan for example. Ryan is like a bulldog. Where when I said, "Hey man, you should go to the Bank of England website and go check it out," I know if I said, or when I did give that advice, he probably spent 6 hours on that website doing research. A bulldog of knowledge. And that's what's required. It's not a burden, it's an opportunity. You should embrace it. So, hey, have a wonderful weekend, everybody. I guess it's too early to take a break, smoke a cigar, drink some wine or something. I actually got a lot of work to do. The world's full of opportunity, man. Carpe diem, carpe mundo. Thank you, FX Street. And for everyone with account at tradersway.com, I'll see you on Monday morning, 7:30 a.m. New York time.